Hey everyone, it's Lucas Fertitta, Director of Acquisitions with Three Pillars Capital Group. We are joined by Jason Nybakken, Commercial Life Insurance Agent at IBC Insurance Agency. Jason and his team provide multifamily operators with insurance for their property. So Jason, thank you for sitting down with us today.
No, it's my pleasure, Lucas. Thank you for having me.
Good, good. So before we get started, is there anything that you want to disclose on your end?
Yeah, so just the obligatory disclosure that says that the opinions on this podcast are solely those are of my own and not of IBC Insurance, and that you guys need to review your own insurance policies to determine your specific coverage.
Okay, very good. So we'll start with the first question. Tell us about your role at IBC Insurance Agency.
So my primary role is kind of in sales and production. I'm out there on the streets, finding new clients and also involved in actually marketing to the carriers to get the deals done. And I also help with renewals and account management. So I do a lot of everything, but primarily my goal is to get those sales up and to bring in new customers to the agency.
Very good, very good. Okay, so how many multifamily units would you say that you and your team cover right now, and how wide is your reach across the United States?
Yeah, so the number of units is pretty hard to determine because we have just multiple producers all over the state of Texas. But we do a majority of our book on the commercial side is dedicated to commercial property insurance. So we're very familiar with it. And as far as our range goes, we write accounts all over the United States of America. So.
Okay, very good. So what do you say is IBC's edge over other firms, and if there's a unit range that you specialize in?
Yeah, so we're a medium-sized agency. We handle a lot of different kinds of risks. We can do anything from a six-unit garden apartment, kind of here in Houston, but we can go all the way to $80 million mixed-use facilities, and we have schedules, 200 million, $300 million of insured value. So we have the ability to do all kinds of stuff here at the agency. I would say that our edge, if we could say that, would be that we kind of act like a small boutique agency in that I'm a lot more involved in many of the operations of our agency. But we have the carriers and brokers to really write large risks. So we kind of act like the small guy and giving you the great service, but we have the ability to write any kind of risk. For me personally, coming from a teaching background, I really enjoy breaking down the coverage and educating my clients so that they feel comfortable with what they purchase and that they understand the differences between different proposals when they're put in front of them.
Yeah, that's very good. I think having a teaching background, it definitely helps breaking down all the details. Okay, now do you provide insurance for just multifamily or other asset types as well?
No, we actually insure all kinds of stuff. I would say that the majority of what I insure is kind of split between apartments and shopping centers. But we have warehouse risks. We have some industrial that we insure, office buildings. We insure everything. So it just happens to be that the people that I deal with, we do a lot of apartments and a lot of shopping centers. And as you all know, there's a lot of here in the Houston area.
Yeah, definitely. There's lots of that in Houston. Okay, so what markets do you focus on?
So Houston's my primary market. We're a big city. And there are lots of risks out there that need insurance. But I kind of go where my clients take me. We have we have insurance, for shopping centers in Illinois and all over the place, most of the states. So I concentrate here on Houston, but I can go anywhere.
Go anywhere. Okay, that's very good. Okay, let's talk about let's say talk about someone who's trying to get insurance for their multifamily property. So when they find an asset, at what phase in the process would you recommend they start shopping for insurance?
Yeah, well, I mean, ideally, I would say that if you're going to be doing a lot of acquisitions and you're really involved in this business, that you need to have a guy that you can go to almost immediately, someone that can be involved in the transaction kind of from the very beginning. Um, they can't really get the ball rolling until you really go under contract, and the most important thing is that if you got a lender involved, they're going to want a minimum insured building limit. They may have other requirements that you have to meet. So If you got a lender, as soon as they get that appraisal done, or as soon as they have a set of requirements, you need to get those to your insurance guy, because those requirements are highly depend on what carriers they can go to, and the kinds of quotes that they need to get to make sure that the closing goes smoothly.
I see. Okay. So like when it comes to, let's see, what information do you need from the buyer in order to provide the best quote?
Yeah, there are a lot of pieces of information that help us in the industry talk to our carriers and get the best pricing. I would, things like, what entity's buying it, the location, obviously. But I think one of the most important things is the updates of the roof and the electrical and the plumbing and the heating. Um, you know, Especially for if the building is older, knowing when the roof is replaced or when the electrical system was updated is very, very important in determining what rate the carrier wants to give you for that property. So obviously, newer roof, newer electrical, less likely that stuff is going to leak or burn down, and so they're going to give you a lot better rate on the property. So the more information you can give to your insurance guy on that type of thing, or girl, the better equipped they are to go to the carrier and get the best rate for you.
Okay, well, but what about loss runs? We hear a lot that loss runs is also a big component. Is it more important to have that in the front end, or can that be later on once you are under due diligence?
Yeah, loss runs is an interesting deal because it really depends on the carrier. If you have a large risk that's involved and you're going to some carriers, they may require loss runs. I would say as soon as you can get the loss runs, you got to give them to them, because they really some carriers, they don't really care as long as the everything has been repaired, everything is in good working condition. They may be willing to overlook losses and just write the risk as it currently is. But some carriers will require loss runs, and their property rate and the rate that they're willing to offer is highly dependent on the losses. So, if you come in and let's say you get a particular quote, and then you come in and say, well, actually, we had a fire last year and it was $160,000. Well, that's going to raise the price, and it may raise the price to a point where the deal doesn't make sense, or that you're going to have to eat that extra premium because of the loss history. So it really is highly dependent on the carriers that your agent is going to. But as soon as you can get loss runs, um, it's always good for the agent to have as much information as possible to be able to do it right for you.
Okay, and one more thing about the loss run. So let's say that there's a property, only had it for 2 years, and I think for most insurance agents, don't they need a minimum of five, or is it just based on how many years the current owner has had the property?
Yeah, generally, if you don't have a 5 year loss history, they usually want a 3 or a 5 year. But if you don't have that, if you only owned it for a few years and you haven't experienced any losses, the majority of the time the carrier is willing to accept something called a no known loss letter, which is a letter stating that you do not know of any losses, and you're willing to sign your name to that. And this really just keeps you guys accountable. That if they find out that you were aware of the loss and didn't tell them, then that could have a significant impact on whether they're going to pay a claim. So they just want to make sure that their clients are being honest with them, so that they can underwrite the best of their ability.
Okay, very good, very good. Okay, so when it comes to underwriting, that's kind of the next big thing. What would you say or recommend for BNC operators out there would be the best plug number for insurance when you're trying to do your, pro forma underwriting?
Yeah, I get this question a lot. And unfortunately, this is a pretty difficult question. The short answer is that there really isn't a number you can use. And especially here kind of in Texas, and especially on the coast here in Houston, Galveston, those types of areas, Corpus Christi. And the reason is that there are multiple factors that go into determining what the price is going to be. Simple things like being on the west side of Houston and Katy as opposed to being in, Pasadena on the east side. That has a huge impact on the rate that they're going to give you, because of obviously the impact that a hurricane would have on that particular property. Um, Updates are a big deal. Um, you know, the problem that I run into a lot is that you'll get these insurance, disclosures from the seller about what their insurance they're paying, and that is notoriously unreliable in my experience. There are several reasons for this. One, that they may not have enough insurance on their property. They may not have a lender that is requiring them to have that, and so to save money, they lower that. Or it may be missing some key things, for example, their limits on their liability may not be high enough, or there may be a bunch of exclusions on the policy that put the owner at risk of not getting a claim paid. So again, I kind of go back to, giving as much information to your insurance guy is going to be helpful, and maybe they can, if they do it enough, they may be able to give you at least a range that you can use in your underwriting.
Okay, very good. So how would you say insurance has evolved in the last 5 years for multifamily properties?
Yeah, so when I can speak mostly to the Houston area, and what I would say is that there really hasn't been a lot of changes in multifamily insurance. We were fortunate until last year, until Hurricane Harvey hit, that we haven't really had any major storms in this area. Rates have been falling and falling and falling and falling over the last 8 or 10 years. Now we're kind of seeing them remain kind of flat. They're not really going up in multifamily. Hurricane Harvey was largely a flood event, so that we didn't see huge losses on the property policies per se, and so we haven't, fortunately, we haven't seen a lot of increases um, in property rates. I kind of see that kind of remaining the same, kind of staying where they're at right now, unless more disasters hit us, and then the market will have to adjust accordingly.
Okay, okay, very good. So what do you see are the common reasons that insurance turns out to be more expensive than originally underwritten?
Yeah, and this kind of goes back to a few questions ago. One of the major things is what the lender is going to require as far as the building values. Um, you know, One of these scenarios I run into is that you think it's going to be, let's say, $100 a square foot. That's a good round number, I guess, for many of the multifamily properties in the area. And the bank comes back and they want it insured at $140 a square foot. Well, all of a sudden, all your limits are going up, and with that, of course, your property premiums are going to go up, and there's not much you can do about it if you're already in on that. Another common scenario I see, is like we talked about, is that the current owner insurance is not up to par with what you're going to need to have, and so you rely on that number when you're doing your underwriting and looking at how good the deal is, and then it gets blown up when you actually put the correct insurance on there. And then, one of the things that I see too is if you have any kind of buyers that are from out of town, they're not from the Houston or Texas area, maybe they're from Colorado or the Midwest or something, they are really surprised by the cost of insurance here compared to where they're from. Um, and one of the big deals that I also see is that things like Freddie Mac loans have a lot of more stipulations when it comes to insurance, as far as umbrella policies and what they have to get removed as far as exclusions and limits. And I see that complicating insurance costs.
Okay, so from all this, I mean, I guess let's say in the last year, how many deals have you seen fall through because of insurance increasing before closing on the loan?
Yeah, usually not too many in my case, and that may just be because most of the guys I work with get me involved early, and I can at least, based on my experience, I can kind of give them some parameters, or what I see, or maybe even look at what the current insurance cost is and kind of say, yeah, that's probably not what it's going to be. So, if you get involved early, then your insurance agent can be an asset in helping you um, determine that before you guys go all in, and then have a deal fall through because it just doesn't make sense anymore. So for me, fortunately, I don't have a lot of deals to go through because I kind of have an idea based on the market and based on the place what it's going to cost. And if I can, give a good estimate, then you guys can make a better decision.
Okay, very good. So everyone out there, get your insurance done early. Okay, so next question. What are some of the common exclusions that other firms try to include to reduce coverage?
Yeah, one of the misconceptions that you see about especially this type of insurance in multifamily is that it's all the same when you get one policy, from two different agents, you get a couple of quotes, and you're looking, well, this one's cheaper. There are a lot of things they can do. On the liability policy, a lot of what I see is I see assault and battery. I just kind of dealt with this actually yesterday, is that someone had an alternate quote, and they had a sublimit on the, first of all, the assault and battery exclusion is basically if someone gets assaulted on your property, you may not be involved, but um, and that person looks to, they're obviously going to want to get the other person that assaulted them, but they're also going to probably sue you. The lawyer's going to look at who owns the property, and you're thinking, well, I'm not involved. But one of the major things they'd be is, oh, there wasn't enough lighting, or there wasn't enough security, or they'll come up with some reason to say that you created a situation to cause this. And so, you want your liability policy defending you in those situations. So I see assault and battery excluded a lot, or sometimes they'll just put a what they call a sublimit. In other words, your full liability limits will not be available. I try, and usually I'm successful in getting that exclusion removed because we don't want that. On the property side, um, you know, one of the things I see a lot is I see that, many banks will require replacement costs, and I see a lot of times property policies get written on actual cash value, which means you're only going to get the depreciated value of the loss. So if it's a $50,000 to replace it, you might only get 40. And then there are other ways such as higher deductibles, really high windstorm deductibles in the case of the Houston area that can lower insurance, but it might be an undue burden. If you have a 5% windstorm deductible on your property, and you don't have that 50 or 60 grand, then you may want to rethink the kind of insurance you're buying to make sure that you don't get put in a situation where you can't pay to repair it.
Okay, makes a lot of sense. Okay, so what would you say are some of the most important coverages an owner should be aware of and almost always get to be safe?
Yeah, I mean, the number one thing I think in multifamily is that you make sure that your limits are sufficient. The main reason is that carriers will put what they call co-insurance clauses on there, which means if you underinsure the building, they're not going to give you the full value of the loss. You pay your deductible, and they're going to give you a percentage less because you didn't put enough insurance in the building. So that's kind of the number one thing. There are a few other coverages. One of the coverages that people overlook a lot is called hired and non-owned auto liability. That goes in a liability policy. And what it does is that, if you have anybody working for you, let's say you have guys, cleaning up the place, that kind of thing, and they go out and get supplies and they hit somebody. Well, their insurance policy, their auto insurance policy is going to cover them, but they're going to also, if they find out they were doing stuff for you, they're going to sue your LLC or your corporation and say that they're doing this stuff. They hit me because they are doing stuff for you. Well, a regular liability policy does not have any auto coverage. So hired and non-owned auto liability provides coverage for your entity, your LLC or corporation, in one of those incidents. We know how many car accidents happen around Houston and every major city for that matter. So it's one of those things that usually costs maybe $300 on a liability policy for each one, each liability policy. And it's a, we have run into situations where that actual coverage has come into play.
Okay, so let's change gears a little bit. The biggest thing you kind of mentioned, last year was Harvey, Hurricane Harvey. Flood insurance is becoming, I think what we're seeing is a little bit more challenging. So which flood zones require insurance and which are optional?
Yeah, so I mean, there are a ton of flood zones out there. I mean, one of the most common ones you see is A or AE or V. That's easily, you can look that up online. I don't want to go through all those with you, but those are pretty good. The one thing I can say is that if you need flood insurance, then you need an elevation certificate. Um, you know, I see a lot of guys, hey, the bank is telling me I need a flood insurance. And I'm like, well, do you have an elevation certificate? You got to get that from the owner, or pay to get it done. It's usually about $600 to get it done per building. Um, that is going to tell you how high your building is compared to everybody else's, and it's going to determine what your flood premium is. Um, and one of the biggest deals, and I ran into this the other day, is that if the bank doesn't require you to have flood, but you still want to get it, there is a 30-day wait. So there's a bunch of storms out in the Gulf right now. Um, and a guy wanted to get flood insurance on a closing, but the bank wasn't requiring it. Well, unfortunately, it's going to be 30 days from now when that policy is actually going to kick in. So just be mindful of that. And if you really want to have flood insurance the day that you close, then you're going to have to get the lender to actually require it from you in order for the coverage to be put in place on that day.
Now, when was that put in effect? The 30-day notice?
That's been in place forever. And that's with the National Flood Insurance Program. That's basically the major underwriter that for all flood insurance for all agents, and all the rates are the same across the board. So it doesn't matter what agent you go to if they go to NFIP for flood. And the main reason for that is, for example, let's say that a storm's coming into the Gulf, and all of a sudden you're like, well, I don't have flood. They don't want you to be able to buy flood 5 days before a hurricane, when you should have had it all year. So, obviously that would be devastating that no one's paying into that program until it needed, and the huge losses. They wouldn't be able to pay it. And to be honest with you, there's still $26 billion in debt the government is on this program. So they're looking for all the premium they can get.
Okay, okay. Well, the next question basically you already answered, but I think it would be good to know is that I would say in the last, I don't know, 6 to 8 months, how many people have you come across that wanted this additional coverage when it wasn't required by the bank?
To be honest with you, I don't see a lot of multifamily owners getting insurance for flood. One of the major reasons is that a lot of them feel that if they survived Harvey, they can survive anything. Um, so that they're not, they don't want to spend the extra couple $1,000s to insure their homes for flood, or the multifamily for flood, when it survived. The other thing I see is that, and as we know in multifamily, it's a whole process to be able to raise rents. Um, you have to have some value adds. So adding that additional cost really just comes off the bottom line for many multifamily owners. And and a third thing I would say is that flood insurance is per building, not per policy. So if you have, an apartment complex with 10 buildings, that's 10 flood policies. So that can get quite expensive.
But depending on maybe like where the layout of the land, maybe you can just do two buildings, or just have to
Absolutely,
do
yeah.
that.
That's correct. Yeah, you have to describe them in great detail, mind you, to make sure that the insurance carrier knows which buildings you're talking about. Um, but yeah, and to be honest with you, we have a private market where you're able to schedule um, flood policies kind of on one policy. It comes out as separate deck pages, but you can do it all as one, so that's for convenience. And in certain situations, especially if you're in a flood zone, I have seen significant savings. Not all the time, but I've seen significant savings um, in flood. So if they're looking for that, sometimes the private market, which there are a few out there right now, is a great place to go if you really want to have flood insurance and are looking for different options other than NFIP.
Okay, okay, very good to know. Very good to know. Okay, so what's your outlook for multifamily insurance premiums costs over the next 2 to 3 years?
Yeah, as long as we don't have a massive number of hurricanes causing a lot of devastation, then I don't see there being a whole lot of changes in the premium. Unfortunately, if we do have a couple of things, I know that after Hurricane Ike, I wasn't in the business at that time. That's a long time, 10, 12 years ago. But I do know from talking with the guys in my office that are very experienced that, you know, you were seeing probably multifamily property rates go up, I would say 40% more than they are now, 40, 50% almost than they are now. So, at that time it was very difficult and very expensive to have that insurance, which you needed. So, you know, of course, that was a pretty devastating storm here in Houston. So hopefully, if we can keep the hurricane damage to a minimum, um, then I don't see premiums really moving all that much in the next few years. And they are, in my opinion, they are at a pretty good rate right now. So.
Okay, well, very good. Well, that basically sums up our discussion today, but I do have one last question. Is there anything that you'd like to add or mention that would be useful for any multi-family operators out there?
Yeah, I mean, maybe I'll just use an old cliche, and then is it, in insurance, usually you get what you pay for. So, understanding and knowing the differences between different proposals will help you as an owner make a better decision. And just having a trust with your agent is, in my opinion, a really important thing because you may be buying something, and the only way you'll know whether it was adequate or not is if something happens. And that's unfortunately that's why a lot of insurance guys like me get a bad rap, is because you don't know what you have until you lose something. And so it's maybe worth just learning a little bit at least, or at least having a guy you can trust that will provide you with the coverage that you need, and so you know that your asset, if something should happen, the insurance is going to do the job for you.
That sums it up in a nutshell. So, well, hey, well, thank you again. We really do appreciate it. For all of our listeners out there, if you want to get in touch with Jason, His email address is published below. So thank you, Jason.
Thanks a lot, Lucas. Really appreciate it.
All right, bye.